Oh, all right, guys. Let's talk about interest rates lowering. If you didn't notice from the news, interest rates have lowered 50 basis points by the Federal Reserve. And we're here in the backyard. This is probably going to be one of the last few times I'm at this place. Going to move out of here pretty soon. But if this is your first time on the channel, this is where I talk all things finance related, more related to personal credit and business credit and funding and of course travel hacking. But today I want to touch on something that is correlated to all of, the banking and financial sector and give you guys kind of my opinion on what opportunities I think are available when just understanding the system and the markets and the banking institutions when interest rates lower. And then I'm going to just give my opinion, and I want it to be more interactive. So let you guys throw your opinions down below on what you think is going on in the markets with interest rates lowering and what you think is going to happen over the next 6 to 12 months. So, real briefly, this is kind of my take on why I think they are lowering interest rates initially right now. We are in a political campaign, right? We're in voting season. And typically the party that is in office will do things to help stimulate the economy or make the individuals in the US feel a little bit more secure. And if you guys do, like, if you're living in the same America that I am, you understand that things have gotten pretty expensive. The inflation rate, they say, is stable, but as we know, they took out some of the most important factors of inflation, which is housing, food, and energy, which is some of the most expensive things that we pay for. And that's not even calculated into inflation anymore. So if, right, you're in America like me, maybe drop down below if things have gotten cheaper, think things have gotten a little bit better in your area. I'm in Florida, so things have continued to get more expensive. And that's kind of my take on that. I don't think inflation has, I think the income and the cost of living has definitely increased a lot more than the income has increased, and a lot of people are struggling, and that leads me to the real estate market. My opinion on the real estate market, let me know what you guys think, is there probably needs to be some type of price correction, especially down here in Florida. Housing prices are really the most expensive they've ever been. We've seen that skyrocket over the last few years. There's homes that were $150,000 and now they're trying to sell for $450,000, and you just see them price cut it, $5,000 every few weeks, hoping that someone will take the bait. Still needs to be a price correction. I don't see just a 50 basis point change in mortgage rates and interest rates changing buyers and sellers. I don't think there's going to be people flushing to buy homes. I think you might see some refinancing going on, and that might affect the market. But in terms of buyers and sellers, I don't really see that changing. I still think there needs to be a bigger correction. I still think there needs to be 0.25 basis points or 50 basis points in terms of that happening. Outside of that, the job market, I've been saying this for the last like 6 to 9 months, which is I actually think there are tons of jobs being posted, but they're literally posting the same job 50 times, the same job in all 50 states, and they're just trying to gather up as much data as possible. And if you guys don't like know, like, a lot of companies are data furnishers, which means they sell to other companies because of how much data they've gotten. And there's no better data than a resume. There's no better data. You get first, last name, where they're from, where they went to college, ethnicity, all different types of things, what their major is. That's the best data you can get. And in my opinion, all these companies are actually just trying to stack as much data and stack as much information on people as possible to be able to then eventually sell if they turn the money printers on again. Which leads me to the idea that the US is in an incredible amount of debt, as we know. We printed a ton. We've sent money in places that isn't our country plenty of times over, and it has caused a lot more heartache in the country and caused, a lot more inflation and things to get more expensive as we know it. If you disagree with that, let me know in the comments as well. I love people that agree or disagree, but let me know your guys' opinions and where you think everything is at in the comments below. With that, we are in a ton of debt that we aren't going to be able to pay off. And understanding the system and how that works a little bit, I do understand it. I find it really interesting. I'm not an expert by any means, but if we were to continue to keep interest rates where they're at, we'd have to keep paying interest payments on that, and eventually we would have to default as a country. And I doubt the US is going to plan on defaulting as a country. And even at this rate, even if we keep lowering interest rates, that default is still near, within the next few years. So at some point, we are going to have to turn the money printers on to be able to pay off that debt and to at least ease somewhat of the pain, or at least create more stability in the markets, or create more commerce in the markets. So when you lower interest rates and you print money, it allows businesses to be able to access capital, to be able to access funding, and to be able to do business and commerce a little bit easier. Typically, when interest rates lower, right, retail as us end up spending more money as well. So things end up stimulating a little bit more. And right now, over the last 6 to 12 months, I think we've all felt it, that things have still been challenging. People are struggling. There are a lot of foreclosures, and there still need to be correction with real estate. There still need to be somewhat of a correction with jobs. And if they print money, it usually creates more jobs because they give them to companies, and the companies need to find ways to utilize that money, just like in 2020, which is what they did, hiring frenzies. So that is kind of my take on the current markets and where that's at. I do think that eventually they're going to have to print money, and that's going to rush the markets. And I do think that's going to happen in the next 6 to 12 months. With that, though, when interest rates lower, if you're a business owner or you're trying to look to get capital for your business, there are opportunities, because over the last current, when the interest rates have been high, it's been a little bit more of a struggle to get capital. Now, I understand the system. I have relationships. I understand what you need to do and the type of relationships that you need to have. Well, first of all, you need to have incredible personal credit. You can't have, delinquents or late payments, or really high utilization, high comparable credit limits, and then having relationships with certain banks is going to be extremely helpful. So if you have that and you're looking to be able to access capital, and you need education, or you need help in putting the right things into place to be able to get more capital for your business to scale, grow it, or start it, then maybe working with me is a good option for you. You can always grab the link below if that is the case. But either way, when interest rates lower, what I want to talk about is that in the past, for the last 6 to 12 months, they've been asking for more documentation. They've been asking for more verification. They want to make sure that you are someone that they can lend to, that you are respectable, that you have shown that you can handle large amounts of limits, not only on the personal side, but also possibly that you have income verification on the business side, or you have cash flow statements if you want, lots and lots of money. They are asking for more requirements of verification, and they have been, especially if you don't have, the greatest personal credit or the relationships already built. With that, though, when interest rates lower, they typically ease up on that, and they're willing to give out more money. They're willing to throw more money around because they can make more money. So when interest rates lower, imagine them receiving an extra percent of profit on their investments. When interest rates increase, they have to take a lot more riskier bets in hopes that they make more money, because there's too many hands in the pot for really stable investments, and they don't really make money on those. So they have to take riskier bets. When interest rates lower, they can take bets on a little bit more stable options, and they have more money to work with. Because when you put your money in the bank, when you put it in checking and you put it in savings, they're not holding it. The banks are not required to hold your money. They hold less than 1% of it, and there really isn't any requirements for them to actually hang on to it and be like, hey, here you go. That's why you have to go through all of these situations and verifications when you want to take out more than $5,000 to $10,000 from the bank, because they don't necessarily have it chilling there, and they only put aside a certain amount that they want to give out each day. That's how bank runs happen, right? What they are doing is they're taking your money and they're investing it. They're going to their VCs, their hedge funds, their other institutions. They are also taking that money and throwing it and investing it in business owners and other types of investments where they can make money on interest or make money on payments. But what they're doing is they're throwing the money into the markets. They're throwing the money into their hedge funds and their institutions to make more money. That's why the stock markets and the crypto markets end up, when interest rates lower, they end up typically going up, because money starts flowing into the markets. It doesn't necessarily flow in from us as retail investors. It flows in from the institutions. So that is what I want to talk about, is usually when interest rates do lower, what typically precedes is some type of recessionary, depressionary period. The last 5 or 6 times that has happened, but it's not right away. It's 6 to 12 months later. So my thought process is, and let me know yours, is that over this period of time, because we're in an election year, they want to stimulate the economy, because we're crazy in debt. They want to find a way to stimulate. We're just kind of doing the foreplay. We're starting to lower interest rates now. We may possibly lower them again and then induce printing to then stimulate the markets over the next 6 to 12 months, make people available for opportunities to make money, to access capital, to do commerce, and in hopes that that stimulates the economy a little bit further when they increase interest rates again, or they tighten things up. and there could be a recessionary period after that. So there are lots of opportunities that are available when interest rates start to lower. And it is typically a lagging effect as well. So that is my take. That definitely was a little bit longer because once I go on these little tangents of each little spot, it's kind of hard to keep talking about each one in a short, distinct manner because new ideas just keep coming up. This video would be 35 minutes long if we talked about each one of these topics. But I just wanted to talk about what happens when interest rates lower. What is my take on what's going on, not only in the markets, but in the system and what you should be aware about. And of course, for those who are tapped in on the business side, if you are an e-commerce brand builder, if you are a business owner currently, an aspiring entrepreneur, you want to build, scale, and grow your business, and you're looking to access capital and funding, you can reach me in the link below as I help individuals do that. I help businesses do that, and I guide them and educate them on the proper requirements and the things that they can do to access that capital. So I wanted to talk about all of those things so you guys can understand what opportunities are available, what happens, and you can interact in the comments below because I think it's important for those that see this video. They also see, where you are at in the country and what you think and your takes because it's an open forum. That's what's great about YouTube and this channel is it's an open forum. I want to help educate you guys on different things in the financial space and what I have gone through and what I have researched and what I have learned with my knowledge, but I want you guys to provide your opinions down below and what you think. Whether you agree with it or disagree with it, let me know. I will comment back in the comments and appreciate a like and subscribe if you can. And I'll see you guys on the next video. Appreciate y'all. Peace.